The stock market is in a super bubble and stocks are going to crash 50% this year. Well, at least according to this guy, Jeremy Grantham. That's what he's been saying all over town. So should you listen to these predictions by experts? Should you panic and sell all your stock? Yes! If you want to lose money, if you want to destroy your financial future. But if you want to build your wealth, you have to learn to ignore these predictions by experts. In fact, do the opposite by buying stocks. Let me tell you a secret. These experts who make these predictions, they don't follow their own predictions. In fact, this guy has been buying stocks. If you have been checking his 13F filings with the SEC, you can see that Jeremy Grantham, through his company GMO LLC, he owns 677 stocks and he just bought 97 new stocks. Now, take a look at all his latest buys. And this was just reported for the last quarter of 2021. And he bought a shitload of stocks. In fact, he's been buying more stocks than me. Right? What has he been buying? Academy of Sports and Outdoors. He's been buying Visa. In fact, he doubled his position in Visa in the last 3 months. Right? So these are all the stocks he's buying. Right? AT&T, Auto Home, Best Buy, Biogen, Booking Holdings. I own that as well. Bristol Myers Squibb, Cabot Corporation, Cars, Caterpillar. I mean, he's buying almost every stock in the market. Chevron, Sienna, and the list goes on and on and on and on and on. Right? So, I mean, if he believes his own shit, why is he buying stocks? I mean, he just bought 92 additional stocks in addition to the 677 stocks in his portfolio. And if you click on his current portfolio, what's he owning right now? Let's take a look. So he is currently owning all these stocks, right? So his major positions are in Microsoft, okay, Apple, United Health, Coca-Cola, and USB. And you can see, again, these are all his latest new holdings. He has got more new holdings than myself. The reality is that no one can predict for certainty where the stock market is going in the short term. No one can predict when's the next bear market. No one can predict when's the next crash. But the good news is you don't have to predict where the market is going in the short term in order to build your wealth, in order to make millions in the market. Why? Because you got to know something. As long as you own profitable businesses or you simply buy the index, it will always go up eventually, right? I mean, take a look at it. The last 121 years, if you simply bought the index, the Dow Jones, it kept going up from 1900 to the end of 2021, despite World War I, Great Depression, World War II, Black Monday, European debt crisis, financial crisis, trade war, COVID-19, it always goes up. In fact, if you take a look at the last 12 years, just look at this, the last 12 years, the S&P 500 has gone from 666 points. Ooh, the number of the beast. Interesting, right? From 666 to 4778 at the end of 2021. So the S&P 500 has gained 616% in that period, capital gain. Now, if you analyze it and you include dividends, that's about 17.6% gain a year on average, just buying the index. The bottom line is that to make money in the markets, it's actually very, very simple. Simply buy the index or buy stocks of fundamentally good businesses and just hold them for the long run. But the sad thing is the majority of people never make money in the markets. The majority of people, in fact, lose money in the markets. Why? Because they read those kind of predictions, right? They read all this crap in the news. Well, I'm here to tell you this. If you had read the news headlines over the last 12 years, you would not have bought stocks. You would have sold and panicked somewhere along the way. I mean, take a look at all the headlines over the last 12 years. Again, this is from 2009 to the end of 2021. Now, what happened in 2010 there, right? This was in the New York Times under your money column. A market forecast that says take cover. With the stock market lurching again, plenty of investors are nervous and some are downright bearish. Then there's Robert Preacher, this other expert, right? The market forecaster and social theorist who is in another league entirely. Mr. Preacher is convinced that we have entered a market decline of staggering proportions, perhaps the biggest of the last 300 years. Holy shit. I mean, think about it. If you read this article back in 2010 at this area, he said we're going to have a market crash of staggering proportions, the worst in 300 years. Would you have bought stocks there? No, you would have sold all your stocks and missed out on a 600% gain because you listened to these predictions. Then the next year, the following year this was back in April 2011, the following year, right? S&P lowers its outlook. Could US default on its debt? So at that time, people say, hey, don't buy stocks because the US government is going to go bankrupt. They're hitting the debt ceiling and they can't pay their debt. And the following year, 2012, now they're saying Europe is going to go bankrupt, right? Europe debt defaults are poised to rattle stocks. The Eurozone sovereign debt crisis, Greece is going to go bankrupt. And the next year, this was in 2013, Bloomberg News said a US default seen as catastrophe dwarfing Lehman's fall. And then in 2013, another expert, Doomsday poll, 87% risk of stock crash by year end. And who can forget 2015, David Stockman, who said stocks and bonds will crash soon. And again, how can you not listen to a guy called Stockman? I mean, he's born to talk about stocks, right? He's not crypto man, he's not bond man, he's stock man, right? And he said it's going to crash. And in 2016, analysts said on Fortune magazine, here comes the biggest stock market crash in a generation. In 2018, why markets are still heading for a crash? In 2019, are you prepared for a stock market crash? And then the funny thing is that in 2020, there was no prediction of a crash. And the market actually crashed in 2020 by 36% during COVID. But it ended the year up 15% anyway, right? And of course, now in 2021 or 2020, you've got Jeremy Grantham, who has just bought 97 new stocks, saying that, hey, we're going to go for another 50% plunge in the stock market. So the point is that every single year for the last 120 years, there are experts who say that the market is going to crash this year. Why? Because bad news sells. It sells news headlines, and that's what the media does. So you could see in the last 12 years, again, every year, they said the market's going to crash. Now, of course, one day, someone's going to be right because a broken clock is right twice a day, right? One day, the market will crash. But should you be worried about it? Should you read these headlines and panic and sell and not dare to buy stocks? No! You should stay invested, and if it does crash, you should take the opportunity to buy at a discount. So, as Peter Lynch has always said, far more money has been lost by investors preparing for corrections and not daring to buy or trying to anticipate corrections and selling stock than has been lost in corrections themselves. In other words, if you're so afraid of market crashes that you never dare to buy stocks or you sell in panic, you would end up losing more money than if you just bought stocks, held on to them, bought them consistently through dollar cost averaging, and held them through the temporary ups and downs of the market. I mean, take a look at this, right? This is the history of bull and bear markets from 1935 to 2018. And you can see that market crashes and bear markets do happen once in a while. It happened over here, it happened over here, and over here, and over here, and over here. And you never know when it will happen. Nobody knows when it's going to happen. But trouble is, people are so afraid of these events that they never get in the markets. Or again, they panic and get out too early. And as a result, what happens? They miss out on all these gains. So if you simply stay invested into fundamentally good companies or the index, and you hold it through these periods, the gains from the bull markets will far outweigh the temporary drawdowns from the bear markets. And in fact, during those bear markets, look at it as an opportunity. If you add more shares during bear markets, it boosts your returns even more, and it guarantees you're gonna end up with millions and millions of dollars in net worth over time. In fact, the best time to start buying stocks are when people are fearful, because when people are fearful, that's when stocks start to get relatively cheap and undervalued. So let me ask you a question. Do you think that most people out there are now greedy, optimistic, or fearful and uncertain? My guess, looking at the chat groups and comments on YouTube, more and more people are getting fearful and uncertain right now. So one way to tell the fear and uncertainty in the markets is to look at the VIX, the volatility index on the CBOE. Now, if you take a look at the VIX, you can see that there's a range, right? It goes from as low as 8, for example, in the last 5 years, 8 VIX, to as high as, my God, 85. So generally what happens is that when people are relaxed and complacent and calm, the VIX is very low. When people get fearful and nervous, the VIX goes very high. So generally when the VIX gets high, when people are fearful, that's the time you want to start buying stocks. Now you can take a look that in the recent period of time, since January this year when the market's been correcting, the VIX actually has been within this area, right? It's gone up to, in fact, recently about 36. Right now it's gone down to about 27, but it's like within the 30 to 36 range, okay? Now, if you take a look at this interesting research that was done, what they found is that when you buy stocks at a high VIX, for example, take a look at the VIX range, right? So if you buy stocks when the VIX is 30 to 35, which is roughly where we are now, what happens 500 days later, right? Now again, 500 days later, it's about 1 year. So again, this is not a short-term strategy. You have to take at least a 1 year view, okay? So when you buy stocks in general, when the VIX is 30 to 35, which are people a bit scared, you can see that a year later, you get 40%, 23%, 34%, you get pretty good double-digit returns across all the different sectors of the market. And of course, like I said, although right now stocks have dropped, they could drop even lower, right? I've said in my Outlook video that this year I expect high volatility. Although I do expect this year to end with a gain, a slight gain, we can expect volatility of the market drawing down up to 17%. I've said that in my Outlook videos. Do go watch that again. So sure, the VIX could spike even higher, slightly to 35 or 45. And that's why when we buy stocks, we never buy all at once. We always buy in tranches. We average in our positions. We buy a bit right now, the market goes down a bit more, we buy a bit more. So if the market gets more fearful and the VIX goes even higher to say 40, 45, and you start buying stocks, then you can see a year later, you're getting even bigger returns, all right? So the point is, as long as you buy stocks when the VIX is kind of like above 30, you can't go wrong. A year from now, you're almost guaranteed to make money. This is based on research for the last 20 years. Now, another indication of fear in the markets are the amount of put options that are traded, right? People buy put options as insurance on stocks. So when people get nervous, there's a lot of put options, all right? Now, if you take a look at this chart from macro charts, what's interesting is you can see that currently, the amount of puts that are traded as a percentage of the market cap is at a pretty high level, okay? In fact, it was only at this level back in March 2020 and back in 2011, right? And these were again levels when people got scared and it coincided with times when the market was near its bottom. Now again, I'm not saying that this is the exact bottom, right? We could still go a bit lower if market makers try to retest the recent lows, but the overall bull market is intact, okay? You can understand this, the bull market is still intact, but right now we're still going through a correction within that bull market. But people ask me, could it turn into a bear market? Well, everything is possible, but I doubt it. Right, I would give it a 10% probability that we go into a bear market. It's a 90% probability that we stay in a bull market, but we are in a short-term correction in that bull market. Finally, you can take a look at this fear and greed index. And as of now, you can see based on this index, we are at the fear level. Now again, sure, market could go down a bit more and we could go to extreme fear, possible, but we are already within that fear zone, okay? So as long as you're within that fear zone of 0 to about 35, thereabouts, right? In this zone over here, which is extreme fear to fear, and you're starting to buy stocks of good businesses or the index, you can't really go wrong. All right. A year from now, there's a very high probability that you're gonna be a lot high. Price is gonna be a lot higher than where they are today. But again, remember, buy only stocks of good businesses or simply buy the index ETFs. Avoid unprofitable companies or hyped up companies or speculative companies because some of those may never come back. So I do hope you enjoyed this video, and remember to keep watching this channel for more insights. May the markets be with you. If you want to catch my latest videos, click on the subscribe button right now. Click on the bell so you get instant notifications once I upload my latest video. If you want to check out my online courses, go to piranhaprofits.com. We're going to learn how to invest and how to trade the financial markets and create an income from all around the world. If you want to join my live Wealth Academy program, go on to wealthacademyglobal.com and find out more about how you can learn investing and trading live online. This is Adam Khoo, and may the markets be with you.